Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Avino silver and gold mines. Avino is traded on the TSX under the ticker ASM and on the NYSE under the same ticker ASM. We're joined today with the president and CEO of Avino Silver and Gold Mines, David Wolfin. And David, always great to have you on the show, especially when it's to talk about really positive news like you put out to the marketplace on March 11th. In here, you discussed both your Q4 and your 2024 full year metrics. And it was a record year across the board, man. Record revenues, record gross profit, record cash flows, record earnings and adjusted
Yeah,
earnings. I mean, it was a big year. Let's maybe start with the fourth quarter because it seemed like a standout quarter for the company.
sure. Thanks. Glad to be back. Yeah, we had record revenue, over 24 million US in revenue, gross profit margin 43%, cash operating margin of 49%, free cash flow 14.1 million, and all-in sustaining at 1862. So we're proud we've managed to keep our costs down and our profits are growing. The margins are great.
Yeah, it's a good time to have fat margins, and the whole industry does, but you have done a good job of bringing the cost down. Let's maybe pan back a little bit here to the full year of 2024 and just look at how things panned out for the year. It was really a record year as well for the company.
Definitely 66 million in revenue, net income of 8.1 million or 6 cents a share, adjusted earnings of 21.3 million or 15 cents a share, all-in sustaining costs at $20.57. So, at $33 silver, that's good margin for us. And then also I'd like to point out at the end of Q3 we had just under 8 million in the bank. At the end of the year we had 27.3 million. So it just shows you that our balance sheet is getting stronger. We don't have any debt other than some equipment debt, and we're unhedged. So who knows what's going to happen with metals, but we're going to be able to monetize it even at these rates. So we're happy about it.
Well, and let's dive in a little bit more to where the costs are. I think it's important to note that, when you were looking at 2023 numbers for the full year versus 2024, you have done a good job of bringing them down. And then I wonder how 2025 will look, David, considering that this particular year, it's unique in that you have a little bit heavier weighting to copper along with the gold and the silver. So maybe break down the mix of metals that's playing into that cost.
Sure. I mean, this year, 49% of our revenue will be generated from silver, 19% from gold, and 31% from copper. There's not too many companies out there, if any, that can say 49% of their revenue comes from silver. So we're one of the purest silver plays, and that's going to go up. Next year, it'll be 58%, and then we're going to go up close to 70% as we bring on our other mines. So, La Preciosa is being built right now, and that's going to add more ounces, more silver ounces.
Well, let's talk a little bit about that, the 5 year growth plan, which also includes eventually bringing in some of the tailings. But just with La Preciosa, big news dropped. And for people that are listening in, maybe they've missed this, that you are under development now. You got the permits you needed to start the development and construction of La Preciosa. And that's going to, as you say on one of your slide decks, give you a return to primary silver because the silver component will be growing year after year. Talk to us about how this changes the production profile, but also the metals mix.
Sure. So we've started developing at La Preciosa. We announced the permits. We're one of the first companies to announce it this year. Shows that Mexico's open for business. This year, La Preciosa may contribute a little bit to production. It's going to take time to develop to the veins, Gloria and Abundancia, but it's only 350 meters away, so it's 4 or 5 months to get into ore. So it's possibly there could be a contribution in Q4. But next year, La Preciosa is going to drive between 30 to 50% growth, and that's based on grade. We're not expanding the mill. The grade of silver is 3 times higher than what we're mining now. So that will also lower our cost. So with economies of scale, higher grade, we're hoping that we'll be in the mid-teens on our all-in sustaining cost, possibly sometime next year.
Well, and I know that people listening in maybe have some thoughts on where silver may be next year, But that's a pretty compelling situation to see grade going up, grade driven growth, but also lowering the cost as the metals prices. If gold keeps ripping higher, it's possible it's going to drag silver even higher with it. And even the copper component you have this year at 31%, it's not a bad year to have it happening with copper over $5. So that's a kind of a
No
nice
kidding.
kicker. A lot of people want more copper production. They give lip service to that. You guys actually have it, but I mean, the focus is precious metals. Now let's talk, David, that the 5 year growth plan also includes eventually to get to the situation where you bring in the tailings and you bring in, I think that's
Sure.
in 28 and 29 that you're looking at that. Talk to us about that component.
Yeah. So that's our third asset. So we're going to go from one producing asset to three. And so we were doing it not simultaneously because this plan was put together prior to the rally. So we're just basically doing one at a time to keep our costs in check. So we did a pre-feasibility study and we came out with proven and probable reserves on the oxide tailings, 6.7 million tons. And this is leftover waste from when we mined in the 70s and 80s. We had an open pit mine there, and oxidized material doesn't typically recover well under conventional milling methods. We have a conventional float plant, so we didn't have the best recoveries back then because they were oxidized. Since the invention of leaching using cyanide in the 80s, we've always known that we wanted to go back and consider reprocessing, but we couldn't because it was an active tailings dam. So during the pandemic, we shut down the mine. We did 150 drill holes and we metallurgically tested it and did the pre-feasibility study. But during that time, we also built a dry stack tailings facility, $10 million investment, and we're backfilling the open pit. And also it's reporting back to the underground to fill the open voids. So now we're able to move that project forward. We're doing community engagement. We're going to do a final feasibility study and probably make a construction decision sometime in 2026. And it should take a year and a half to build it out and should start contributing in 2028. And that is a money maker. The capex to build that one out is about $49 million. And the internal rate of return was 26% post-tax IRR, but that was at 23.45 silver and 18.40 gold. At spot prices, the post-tax MPV more than doubles. It goes up to 134 million, and post-tax IRR is 45%. So the cost per ounce of leaching is $10. So that will drive our costs even possibly down into the low teens by 2028, 2029. And so our goal is to get between 8 and 10 million ounces a year. So then we're an intermediate size company. And there's two fewer companies out there with the Gatos and Silvercrest gone. So the spotlight is on us.
I think that's a great point. Some of the primary producers being scooped up by both First Majestic and Core, but you're growing into a intermediate producer over the next couple of years and really seeing your production profile ramp up while the costs are going to keep coming down. And it's really interesting when you went over that metal sensitivity. When you did that study, look at how different the metals price are today. Any differences with La Preciosa based on where spot is versus where you calculated it for the project?
Well, our cost per ton at Avino is under $100 per ton, which is very good for an underground mine because it's a bulk tonnage type mine. At La Preciosa, it'll be a bit higher because it's a narrow vein, but the grade is much higher. So we don't have an independent study on it. We basically used our engineers and put together our own plan. So we're going to deliver cash flow and we'll let everyone know more about that when it actually happens. And so we're excited. We had a mine similar to this when we first reopened Avino back in 2011 called San Gonzalo. So it's a similar type thing. And the grades were much higher and we generated significant cash flow from it.
Well, we'll keep following along for maybe a little bit in Q4, but definitely next year to see how things look when the quarterly reports come out from La Preciosa. Let's
Yeah.
also talk about the exploration upside at the project or at any projects. Do you want to reference any exploration around the Avino mine or around La Preciosa?
Yeah, we're drilling right now at Avino from surface drilling below level 17. which is the bottom developed area of the mine. And so we're on hole number one. We've done some drilling back in 2023 and extended the mineralized zone at depth. So we're excited about that. Last year, we didn't do any drilling because our cash position at the end of 2023 was about 2.5 million. And now our cash position is around 30 million. So we can afford it. So we're doing that. And also, some people have asked, would we consider going even larger than what we've anticipated? And so we're going to consider an optimization study in the future, but we want to drill these obvious areas because the engineering firms will only use the material that you give them. And so if we know there's areas that need to be drilled, then that's what we're going to do this year.
Yeah, it's going to be interesting to follow along to see how the drill results come back to see how you could potentially expand. I've gotten that same question, was actually going to ask you that, what kind of expansion potential is there? Let me also ask you this. What about non-organic growth? Are you still looking at potential accretive acquisitions to continue growing the pipeline of projects?
Not at the moment because we find that that's every junior's downfall. If they do M&A and you go into a downturn in the market, then they're obligated to outlay a lot of cash to maintain those assets because we've been around a long time. We've been through the ups and downs. So we spun out non-core assets. We sold off Braylorn. We're a big shareholder at Talisker. But our focus is organic growth. We control our destiny. It's not opaque through M&A. It's clear. Our tagline is we have a clear path to transformational growth. That is through the assets we own. Right now, we're about 250 million market cap, 8 to 10 million ounce producers are over a billion. So we don't need to look outside our portfolio unless we have equity leverage. Currently, our PNAV is probably just under one, and our peers are around that. So if we exceed our peers and we have some leverage, we could consider other acquisitions, but they require money. And so we've got the money for La Preciosa. The capex for oxide tailings is $49 million. So if we had 70 or 80 million in the bank, then maybe we would look at outside our portfolio, but we don't think we need to. We've got enough growth in our portfolio as it stands now.
Well, I think that's a great place to wrap it up because it really highlights the strength of the assets already in place, the organic growth on tap over the next 5 years. And I'll include a couple slides for people listening in that kind of outline the 5 year growth plan, but also some cool pictures that you put on your slide deck of all of the equipment showing up at La Preciosa. It's an exciting time for the
Well,
company. It's an
yeah.
exciting time just looking at the financials. I can only imagine how fun this is going to be if we talk again after the Q1 financials come out, David. But for those listening in, if you want to follow along with all the news flow coming out of Avino Silver and Gold Mines, definitely click on the link below this interview. It takes you right over to the company website, straight to their news section where you can follow along or sign up for updates. And David, as always, looking forward to our next conversation.
Thank you. Appreciate it very much.